We have 4 to 5 investments. Majority of our capital is on the export side. So our companies work on artificial intelligence, blockchain, machine learning, some of the cutting edge stuff. And they're companies that are growing, all fortunately in this space profitable, which is another major advantage in terms of developing confidence in the investment space. So these companies are growing and serving clients in that space. Our goal is to have enterprise client work in the US. And what that means is the people that are working with our companies are larger in scale. So our preference is always to go with that type of a clientele for our portfolio of companies.
Ahsan, so you have your tech venture company, Sai. Could you please tell us a little bit about your background and how you ended up in the VC field?
Sure. So I'm the managing general partner for Sai. Prior to starting Sai, I was in the US for 20 odd years. I started my life as a technologist, built platforms, developed program management offices where I rolled up technology teams. And then the last gig before I came to Pakistan was heading data for a holding company. Came to Pakistan, was very passionate to bring that experience, capital and market access over here and invest in what I and my team feels is the venture opportunity in Pakistan, which is very export focused, frontier technology focused, where we feel that our cost advantages and our talent advantages can give investors the type of returns typically associated with ventures.
Sai is a relatively new company in a very new space. You came at the end of the VC wave. So what made you decide to come at that point when the funding had started to dry down?
Yeah. So I have seen regional markets do really well, specifically in the field that we're investing in. So yes, we came at the tail end, but we formulated a very fundamental based thesis. And one of those things was that we will invest in rupees, we will focus on frontier tech, we'll focus on export markets. That was our area of focus primarily. And then we look at different type of companies and startups in Pakistan as well. But our primary focus has been in that space where we've made most of the investments. We've announced 2. There are 2 more that we'll be announcing in the next month or so. So we've been fairly active. So yeah, we came in the tail end, but the opportunity was right for that. And I can explain why some of the things, the scale, our companies have not scaled so much yet, but that's a huge advantage when technology is globally shifting. And so Code Ninja as an example, it's a 200, 250 person type company. They are frontier tech focused, they're focused on global markets, but they're small enough that as technologies, AI is coming in, technology is shifting, they are very rapidly able to restructure so they can cater to their clients. And our companies focus on enterprise clients globally because we've always felt that that is the place where the most cutting edge work happens at scale. And since I had been on that side for a very long time, there was a deep understanding of how that demand will hit the developing markets. And then we would like to be in this technology wave, we would like our companies out of Pakistan, our portfolio of companies to win work in that space and be recognized globally, a wave we frankly missed from 2000 to 2020.
So could you walk me through your portfolio companies and explain how they are export oriented?
Yeah, so we have 4 to 5 investments. Majority of our capital is on the export side. So our companies work on artificial intelligence, blockchain, machine learning, some of the cutting edge stuff. And they're companies that are growing, all fortunately in this space profitable, which is another major advantage in terms of developing confidence in the investment space. So these companies are growing and serving clients in that space. Our goal is to have enterprise client work in the US. And what that means is the people that are working with our companies are larger in scale. So our preference is always to go with that type of a clientele for our portfolio of companies because we have the experience with our partners to restructure these companies to have delivery models that align with those types of clients. Because when our companies do work with them, it's complex work, it's scale, it is longevity, and that not only is very, from a financial perspective, very beneficial. The talent in our companies grows much faster, and technology in the space we're in is a people business. It's a business where we want the best brains to grow and compete globally, and so that cycle and that relationship really helps.
Right. So we talked about previously that your companies are profitable. Now, unit economies has been a problem for many tech startups. How is that a problem that you have solved, especially in sectors like trucks and cargo, which are very cartel and mob based? So how do you make your presence and how do you make it work?
Look, when we're valuing companies and evaluating them, our number one goal for them is you have to be technology oriented. Business models and other things are important as well. Everything's important, but you have to prioritize what matters. We are a very price sensitive consumer economy, right? Whereas the Western economy is not so price sensitive. So I think your question is more relevant to startups versus just export focused companies. Like, how do you win in that space? So our guiding principle and our advice and expectation of all our companies is you have to win pricing using technology. So if you talk with the logistics space, for example, we would want route optimization to be better than any other person who's doing it manually. And because once you route optimize across 1,000 vehicles and trucks, then you start really seeing the benefit in winning the type of business. So our bedrock, our foundation was, if you are a startup in Pakistan, your business model has to be very localized, which is why our board has people, having local investors allows us that knowledge base, which I alone necessarily will not encompass, right, or have. But our technology has to be one that you are not subsidy dependent. You are winning the same business, but with efficiency generated out of technology, because that's the area where you're going to beat your incumbent or your predecessor. That's the area you have to be really good at. Versus the other way around, where you want to scale quickly, get market share, but the foundation of your success is not based on technology. That doesn't last. And we've seen, unfortunately, some of those problems in the last 6 to 9 months sort of surface now. And I hope that as this next wave of entrepreneurs come in, they understand that scaling is important, but not at the expense of a strong technology foundation, because that's the business that you're in.
So there are problems coming on in the last 6 to 9 months. What are those challenges?
Well, we've seen a lot of valuations and good startups struggling because they grew in scale, but as I think the Ali had mentioned in the last interview as well, that those unit economics have not been really beneficial because everybody was scaling, leveraging capital to get market share. But when you turn the switch and remove that financial advantage for the consumer, then they're also switching behavior, right? So it's our discretionary incomes are lower nationally. So when you're in the consumer goods business and you take away the pricing advantage you were giving in during scale, then people have switched back to other options. So those challenges have obviously surfaced and impacted some very good founders and startups, which I really hope they survive through this phase and focus on the technology and then sort of grow back up in a more foundational and sustainable way.
So earlier you said because you're export oriented, maybe your products are not as price sensitive as some other sectors. So while I can expect that from Code Ninja, because I'm assuming you're exporting coding services, but a startup like Truckistan would be very locally, catering to local clients, especially in the current economy where there is demand suppression, where the interest rates are really high. So how would you make that startup work if the startup is working?
How would I what, sorry?
How is Truckistan facing these challenges of demand suppression in which industries are closing down, especially the smaller businesses? And I think the Truckistan caters to smaller volume cargoes, right?
Yeah, so and they have a diverse business model where they are taking their technology and using it to export as well. So they have clientele globally that wants to use their technology for their operation. So their model is diverse. Where they are dealing with operations and logistics locally, but their tech space where they have built good models that are scaled and they have data to have processed, they are taking that outside Pakistan and now generating demand for that, which makes us very proud because that means that the design of their tech and the tech is being really valued. and applied for operations outside Pakistan as well. But yeah, to your concern, local demand is depressed, and these factors are there. That's why the startups are being challenged. But this is why we focus on technology so much in our evaluation as well as post-investment, advice, which is focus on this. This is the tech. Good technology is what will save you from these challenges. You will be able to get price optimization from it. In fact, we expect it. You will be able to have operational efficiencies because of this. We expect it. So that's where, the answer comes back to focusing on technology, focusing on design, focusing on the foundation of your company and making that technology the foundation. What never appealed to us inside was a digital experience that was missing in Pakistan, and just starting with that without focusing on a long-term technology design. That was never appealing because it was sort of just step 1 or 2, right? This happens manually today. Now I will have an application and I have a platform. That's a good sort of consumer view. But as a founder and a CEO and a CTO, we expected them to build things underneath that lets them win continuously. Take journeys of Amazon and some of the major companies in the world. They weren't taking 2-3 steps. They were laying the foundation for continuous evolution and advantage creation. And that's the mindset that we want our entrepreneurs to have. We focus a lot in that space when entrepreneurs come to us like, hey, bring your CTO with you. We want to know what that person's view is. How is that person going to help you win in your business goals and advantages? But when you come back to the export side, which are totally exporting services and are in that space, there obviously the challenges are different. There the challenges are that those companies have to, one, be very frontier tech focused, which is easy to do because they're small. So you're not having to transition 100,000 people, having to transition 200-300 people. But they are now, all our portfolio companies are now operating with enterprise clients. So they're understanding quality standards, they're understanding delivery models, they're understanding a matrixed environment, they're understanding complex integrations. In the past, on the export side, that was not a focus, but now it is for them. And seeing them succeed in that is really, really fun for us. Our companies are working with clients who are talking about developing global capacity centers here. Their clients will come to Pakistan and spend an entire day designing solutions. They're not talking about project status and reports. They're actually in a room and designing solutions because we have access to those CTOs or CTOs at $10 billion plus companies. We know how they look at business culture and how they develop relations. And once our portfolio of companies are breaking that mold, it's really exciting. One of our companies just got invited to Austria. Y Industries. Ashar is there today. And he's in a conference where his technology knowledge is being weighed and asked and engaged with. So we like that. With that coupled with delivery structures, that's when you start to have a seat on the table when it comes to global technology work at scale. And that's our goal.
We're talking about global capacity centers and foreigners coming and helping us. Tomorrow, Karachi is going to be shut down because we have foreign dignitaries coming in. Recently, the Japanese were under attack, possibly because of a mistaken identity. So in such an environment, when we are extremely unfriendly for investment, how are you able to lure foreign knowledge bases or even foreign investment to come in? For anybody to have any interest in us, vis-a-vis countries like India, which are right next door and offer a lot of the same advantages without the disadvantages. So how do you position yourself?
So there's no, simple answer that applies to all, right? One advantage in the technology domain is interaction does not require physical presence. So we obviously leverage that. But I think your question is generally the macro challenges, how do we deal with it? So I'm not a very, I don't attach emotion to these things. I keep the macro and micro sort of separate. Our focus is on what we control, and then when it comes to macro, whoever wants to engage at the government level needs advice. I always share that, try and study what has not worked in the past so that the advice we give them sort of helps them make the change. But I think we're all aware that things move slowly within the government domains. These things don't help our brand, they don't help our reputation. We need people to come in and out and engage and be excited because everybody knows we have a cost advantage, but cost advantage for large enterprise clients is just a conversation starter. It does not sort of have the long-lasting relationship development that we're looking for. So when you find incidents like you're referring to, it hurts us because people ask, right? Like, is it safe to come? Is it that? So me being in the U.S. for that long and then coming back, obviously there's a little bit of trust factor to that. And then when they come here, we make sure their experience, both intellectually engaging and from physically, is good enough that they want to keep coming, and they understand that those are pockets. But there's no simple answer to how do we solve that, because somebody who's reading news, who's sitting in a large conglomerate in the world, like, oh man, I can go somewhere else and get this done. So there's no easy answer to that. We keep trying and we show them value, and hopefully they keep engaging with our portfolio of companies.
You mentioned the government. Any thoughts on the Pakistan Startup Fund?
Yeah, so good thing right off the bat was there's capital being put into this space, which is a good thing. I think typically how governments go about it, it's tricky. We prefer them to be very hands-off. These entrepreneurs need a lot of support, guidance. They have to face a lot of challenges. They can live without additional government or bureaucratic pressure. So as long as that comes without that baggage, I think it's a good thing. One of the things in the fund was that they're not taking equity for that. So that allows the startup more equity available for continuing in their journey. So let's see how it gets implemented. I think it's a good first step in terms of providing capital, which was missing. I think more smart money that comes into this space, more institutional capital that comes in, I think it'll help. And from SAI's perspective, our goal is to provide them that low risk opportunity with venture upside, so that this first couple of years, we need success to happen. And so, like in our portfolio, we don't talk about the 1 out of 20 that have to succeed. We talk about 80% companies have to succeed. Our portfolio should have a high bar for that, because we raise locally, so we have to cater to local risk appetite as well. And it's a new space. Our startups are young, our export-oriented company, our technology space is very young. So you need success. You're not going to find the home run or the big six happen just quickly. There's a learning phase to that. So our goal is that the people who engage in this, smart money that comes into this space, sees that success. And then the risk appetite starts to go up. One of the things I talk about a lot is, and the basis for why we have a rupees-based fund, it was like, if I'm sitting outside Pakistan and I have some risk capital, I will follow smart local capital. No great economy has been developed with some outside capital and people coming in and doing it for you. There's enough excess capital in Pakistan. It goes into real estate and other areas. And they're very smart people who understand business models here. Now, when they see an opportunity and they come into the technology space, then they should be oversubscribed in this space, so that international capital wants space on the cap table. They should be coming in asking, like it happens with our neighbors, right? When an investment opportunity opens there, the local capital takes most of it now, and the international capital is asking for it. We want space. We want our connections to allow that space, because they know that it's not as risky, and smart money in that area is already going there. And that's what we want to do over here. So I keep telling everyone that I think there's excess capital in Pakistan for the stage we're at. And if that excess capital succeeds and sees low risk in this, then the doors will open for a lot more. And then international capital, when they see local smart capital, moving capital from traditional assets to this space over the next couple of years, they then start to get very interested, because global smart capital is connected with our local smart capital. There are a lot of interactions that happen there, but they have to see that these people and these institutions are putting money behind this thing. So we're trying to create a portfolio and an opportunity where that risk is a little lower, and we create the venture upside, which is why we're very hands-on with our companies in this space, because it's a delicate period to be in.
So your narrative is very different from other VC founders. 2 points that stood out for me is, one, you want 80% success rates. Most founders are like, if we have 10 projects and 2 do really well, that's great success for us. Nobody is looking for 80%, not locally and not internationally. The second thing you said is the investment of local capital, local businesses. And you're right, a lot of it goes to real estate. For that money to find its way to tech, it's mind blowing for me, because it's not something most businesses or most companies have been able to achieve. Usually, it's just factories, textiles, malls, or real estate.
Sure.
So, how is your narrative so different from the other players in this field?
I don't know. I don't agree with the word narrative. I think it's just, for us,
That's how your experience, your viewpoint, your beliefs.
It's what we thought was the most logical place in terms of technology investment. So I mean, think of yourself, right? And I say, hey, give me 1,000 rupees and take space in our fund, and where your money is going to go, they're making money in dollars, right? Typically, we see a 10 to 15% devaluation happen, right? So we're already going to meet your expectations if you put money in a bank. So we're already beating that, right? And then wherever your money is going, they're all profitable, period. Right?
So your returns are in dollars and higher than the record high MPC rate.
Yeah, so because our services component of the portfolio, which is primarily the export is our focus, these companies are already profitable. They've always been, which is why those deals are very interesting for us, because they're not coming to us and saying, oh, we need your capital. It's a very strategic investment. We spend a lot of time with them, and we have to sort of come up with a plan on how do they go from where they are to where we want them to be. So these are like, much longer and more strategic investment conversations. But it's as an investor, you're taking 1,000 rupees, you're putting in something that's earning in dollars, which is got low risk because they're already profitable. That's a very safe space to be in. So our goal is a very high floor mindset. And then the multiplier on the return, I'm fine, a few basis points being lower there, but we can't have the floor being low, like this company will go out of business. I think that's our thesis. That's what we want to focus on. We want to make sure our local capital sees that success, It also creates more exit options for us. We have dividend plays, we have roll-ups, we have obviously the IPOs, we have acquisitions. So all of those options are there as well, which makes the risk a little further lower when we evaluate these opportunities. So the idea was pretty simple. Take your rupees, invest, return in dollars, put money in things that are low risk because they're already profitable. So you're not, they don't have existential threats, and then help them scale and work with the best in the world. That's where I get most excited in that space. So this initial phase is good and clear, but when they work with enterprise clients and the best brains over there come engage with them, and they like that engagement and they like the technology mindset, because those guys work with the best in the world, right? They work regionally with the best, they work in the US market. And when they come to our portfolio companies and they have those multiple days here, and they walk out and say, no, that was a very smart idea. I think we should, solve this problem in this way. That makes us very proud, because we know that if that mindset exists in our portfolio of companies, they will grow, and they will move forward. And we're here to help make that happen.
You mentioned talent. Another frequent complaint of VCs and other MNCs even is talent acquisition has become very challenging, especially with the whole brain drain argument. So is that a challenge that you face?
Yeah, I think it is a challenge. To say otherwise would be foolish. The brain drain that's happened in the last, I think, couple of years definitely has not been, good. Our portfolio of companies, they face that problem as well. One way we solve it in the domain of what we control is we help structure contractual agreements in a way that brain drain doesn't happen, or is minimized. But in the macro, obviously, technology talent particularly, it's very difficult to get back. And the world is shifting, right? You have to keep in mind, we are going through a AI, blockchain, frontier tech transition that's happening. And in that space, success happens because there are going to be people who are going to do really well there. So it is a concern. We do create ways to keep him and incentives to keep him here, but in spite of that, I think we still face that problem. So that's another space where, from a government's perspective, they should engage more to understand how do they create incentives for smart people to remain in Pakistan. But no easy answer to that.
Right. Could you share a few numbers, the size of your fund, the average deal size?
Yeah, so our fund is about $10 to $12 million, and our average deal size varies. We've from about
Largest
$1.5 million to like down to 100,000. So I'm not pigeonholed into like this is the amount of capital we will invest. I think it comes down to opportunity, value, and how much we feel this company can grow. So we're in that space. About $1.5 million to down to 100,000. That's where we like to be. Love the export size. That's our focus area. We've now been in the space for enough time that we know our path moving forward, and our companies have grown after our investment, which makes us happier, and we're very proud of them, and here to help them continue in the journey.
Which company makes you the happiest and the proudest?
That's a difficult question. I'm gonna pass on that. I think all of them are doing really well, working very hard. Understand and align with us on the North Star and the end goal. So I don't have favorites.
Okay, let's go back in time. Let's say it's 2022 when you're just starting your fund. If you could change one thing, what would it be?
I'd focus more on the storytelling component. I think we're working quietly and figuring things out, investing, developing our models. But I would have. It was sort of a no-brainer for us, like what we have done so far from the beginning. But I would have probably gone more out and highlighted this more and focused on it. I don't think we did a good job of sharing our thesis very actively. We've been in the space for a decent amount of time. I think the last 6 months have been very sort of public in the space. But prior to that, we were heads down, work, understand, build. Create solve the puzzle pieces, how we can support success. But that's one thing I would have changed. I'm a data person, so I want to keep mining more data and sort of leverage that. I'd focus more on that. But yeah, so far it's been a decent journey and quite happy.
So last question. Pakistan has gotten some semblance of political stability in the last few months. What are your medium-term views for the investment environment, especially related to tech and VC, for the next 3 to 5 years, and the long-term view, 10 years and up beyond that? And how would Pakistan continue to compete with countries like India that can offer the same cost advantages without the disadvantages?
So, to your political stability question, I think
economic stability,
political and economic, they're kind of hand in hand. We're going through a very difficult period. The cause of that over the last 70 some years, I think people have written books but forget why, like all of that time. I think our generation's focus has to be about fixing some of those fundamentals. We spend, I feel, too much time on what I call like the middle layer. So they're not the biggest goals and they're not foundational. They're somewhere in between where action happens and things move, but they're not either getting us to the top of the world and they're not fixing foundational problems. I think our policy making has to focus on those two areas and not just nice to have middle tier things, because we just don't have the time available anymore to do that. So I think with stability, obviously comes economic progress. My view in the next 3 to 5 years is that Pakistan, if we do things right, we can really take advantage of the technology shift that is happening globally. Every 15, 20 years or thereabout, some things change and people come in and try to grab that market. And so we are in the middle of that right now. We anticipated, obviously, from size perspective, this back in 2020, 2021. This is what's going to happen. Because I had already seen sort of like the data as a new oil, it was happening. We were getting ready for this phase. And we're in it now. So we need to grab, business opportunity in this space, and we have to grab the best type of work. One thing that really is a pet peeve for me is when organizations work for easy things. So yes, they have to make money. So I understand it's a transitional period, but their goal has to be to do complex work at scale with global players. If they're not singularly focused on that, I think we will leave opportunity on the table, which we should not do as part of this technology wave. We left it in the 80s, we left it in the 2000s, can't leave it in the 2020s. In 5 to 10, if we lay the foundation and we have a large population base and we start engaging globally, The second thing I would really highly encourage is the B2B space in Pakistan. I think I would love if local businesses who are well structured become technology focused and acquire technology advantages from players over here. Banks do that, telecoms do that. Some people do. It's not a vacuum, but everybody should. One of the big reasons why the US innovation waves keeps moving is because the businesses over there are competing with each other. And when they want to leverage technology to win from their competitor, they're not building all of that in-house. They're going to smart people and saying, come partner with us, help us make, make this happen, make that happen. That's got to happen in Pakistan. I think in the next 5 to 10 years, if that happens, then you will see a lot of people, a lot of smart technologists in Pakistan doing business here and growing and not being worried constantly about exporting their services and gaining great experiences here. So that's my hope.
So when you talk about B2B businesses and your hope that they turn to tech more, which sectors in the next 10 years do you see the most potential? I mean, fintech has become a bit big now, so there's some sectors that have not been touched at all. So which sectors do you see the most potential in?
I think all of them are it's such an infancy, frankly speaking. All of them have potential. Like it's hard to, you've got the typical sectors of e-commerce, fintech, and so on and so forth. But I see everything, I see ed tech, I see health tech, everything is at an infancy. So with good business models that they will develop and learn through this period and a very strong technology focus. That's the one missing piece that sort of disappointed me and I was hoping for more in that space, where technologists are developing the type of platforms that are foundational to these new wave of businesses. But I think all of them are at such an infancy that pigeonholing like one or two will grow, doesn't make sense. Obviously, we are a 250 million large country, so consumer areas of retail and health tech and ed tech, those are usually the ones that if people figure out those models, they'll expand quickly. But you've got so many minor sectors as well that have got such great opportunity that even though they're small in percentage, the volume will be so big because we're a big country. So I'm bullish in terms of every one of them has the space to grow. There's no one sector that will just people should avoid. Tax equality and tax incentivization will really help make some of these digital businesses compete with the traditional brick and mortar businesses. I think that's something that from a government perspective they can do, which makes the playing field even for everyone.
Great, thank you so much. That was the last one question.
Thank you.
Yeah.
If you could ask, there's been a big global shift towards climate change, startups, and things with more green investment. So what does that mean for Pakistan? Is this a great opportunity for Pakistani companies to raise foreign capital? And do you think this is a shift that VCs over here should?
So before I answer that, Sarmayakar is doing actually green fund. Are you aware of how that capital is basically social capital, right? So that capital doesn't come in to say, most capital goes to make money, right? So that capital is a more of a social capital, impact capital, right? So yeah, I can help answer that.
Sure. So given climate change and the buzz around it, do you see funds flowing in for startups that help solve climate change problems? And have any of your portfolio companies been towards that direction currently, or do you see that going in the future?
So I'll answer the second question first. None of our companies are focused on that today. But from a climate change fund perspective, it's going to be a very interesting environment because globally we're very diverse, geo-positioned, right? You've got the glaciers, you've got the oceans, you've got rivers. So our location and our climate diversity is very interesting to the world. And naturally, like everyone else, we're heavily impacted. People hear about our earthquakes, they hear about glacial melt, they do. So that capital coming into this space, I think will happen. I think we provide the world an opportunity to understand climate impact early, because from wherever the capital comes in, they will want to take learnings back as well. So I think it's a big upside. I wouldn't say I'm an expert in this space at all, but I know that we've got the natural space which people will want to study, invest in, and hopefully protect as well. Some of that capital will come in here to make sure that our environment is protected, and it'll want to take learnings back to their base markets and apply them. Like our glacier melts, I think a bunch of studies are happening already in that space, and people are very interested on how these, what are the impacts that we're assessing, how we're preventing some of that change, and take that back. So I think where we are in our diverse geolocation, geo-environment, I think people are very interested, and it'll happen. But unfortunately, our portfolio companies have not veered into that today.